Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 18, 2022. Hope you're all doing well. In today's segment, we'll take a look at how to trade option like a pro using bar chart premier and also Optionstrat. So with that, let's jump in and get started. Look, bar chart premium is a great application. It's hardly $200 per year. It's well worth it. It's got a lot of strategies when it comes to options and also a lot of data when it comes to stock. So whether you're a stock trader or an options trader, bar chart premier is a great application that you can subscribe to, and it's very low price compared to other applications. It's just $200 for bar chart premier for 1 year. So with that, let's jump in and get started. Look, as you go into bar chart premier, you can get a lot of data. You can go into stocks here and you can look at quick market overview. As you look at market overview, you get nice information here. Talks about stock market leaders and how the market has been doing. As you can see here, S&P down, Dow Jones down, so on and so forth here. And then you can look at the market leaders and see what they're doing. Look, with the exception of Meta here, everything else is down on Friday. So in this segment, we'll not spend too much time on the overview. We'll jump in and look at a few more details. Look, you can also get some news items here and look at advances, decline, the regular stuff. So in today's segment, our objective is to look at how to look at the best strategies. Two of my favorite strategies when it comes to options is to buy call options or sell put options. Those are two my go-to strategies, and I might do also spreads if the account size is less, or if you don't want to expose too much money, you could go and do the spread. You could buy a call spread or you can sell a put spread. So without further ado, let's go into the stock screener in bar chart premier. Look, as you go into the stock screener here, it will bring up a nice stock screener. What I've done is I've created multiple screeners, so that way I look at the criteria that I want. Look, I got here a stock screener. It's called, look, we got buy call. I love to buy call option when the implied volatility is very low. Let's look at that here, and let's look at the results here. And look, from a results perspective, I can go in here. I will go into my stock screener view, so that way you get all the relevant data here. Look, it's pretty simple here. I will also show my criteria so you understand the criteria of buying the call option. Just with this filter here, look, we went all the way from around 8,000 or so stocks to just 107 stocks where you can buy call options. So from a criteria perspective, look, my screener criteria is very simple. I want to make sure the basic earnings per share should be positive. I want company to make money. That's why range is 0 to whatever is the maximum. Profit margin, I'm looking for companies making money here. That's why it's more than 0. And average true range, I want it to be more than 1. So that way, these companies stock moves up and down. And I want total open interest to be at least more than 50,000. As you can see here, you can bump it up if you want to be a little more restrictive. I think for now it should be good enough. just for the arguments, we can make it 100,000. So that way, we want a nice open interest here. Let's do 100,000. There we go. We have 100,000 as the open interest. So this tells you, folks are the retail traders and, some of these bigger companies, they're really, holding the contracts. They're not closing it. That's why it's called open interest. Folks are actively holding the option positions here without closing it. And then we got IV rank. IV rank tells you the volatility is low or high. When you want to buy call option, you want the IV rank to be below 40, so that way you're not paying too much for the option. And relative strength index, very important here. I want the relative strength index to indicate the stock is sold off. I want this value to be less than 55, so that way I know I'm not paying too much money and I'm not chasing the stock as it goes higher. And price volume here, price volume, I put it as above 500,000 here. I don't want some penny stocks in my criteria here. That's why I put price volume more than 500,000. This is price multiplied by volume, as you can see here. And because I'm buying the call option, I don't want to buy call options on very low price stocks. I want my last price to be at least more than 20. And market cap, I want the companies to be stable. I want at least to $5 billion market cap, and go from there. And last but not least, I want average volume in 1 month to be more than 2 million. So that's my criteria here. As you can look through here, we got a bunch of companies here, and what will go is my screener view. This application bar chart lets you customize and add the columns that you want to see here. This is my view here. Look, we got 96 companies here. So what I love to look at is really, many of you don't have time to look at 96. Depending on how you want to trade, you can go back to the set filters here, and you could go here, and you could say if you're in a mood for a mega cap company here, just click on mega cap here. And we could just run this here and look at only mega cap companies. All right, let's go to the results here. Now we'll be looking at just mega cap companies. Look, we got just 18 mega cap companies, and you could also sort this by option open interest. I can see the highest open interest at the top here. These are super active in the options world, as you can see here. Look, from a mega cap company's perspective, we have Nvidia. Nvidia is at the top here. It's open interest is very, very high, as you can see here. We got open interest for Nvidia right here. Look, it's a 3.1 million option contract. That's a big number here. And as you look through here, Nvidia has been doing pretty good here. 5-day last week, everything got clobbered, as you know here. But generally, look, Nvidia is good. It's above its 20-day moving average. And it's above its 20-day price is positive. The performance in 20 days is positive. 1 month performance is positive, and so on and so forth. In 1 year it's a negative performance, but 2 years it's positive. So this is a good company here. And look, from an IV rank perspective, it's very low here, 20.53. That tells you if you're buying call option, you're not paying too much money because IV rank is low. Implied volatility right now is 52.29, but if you look at the rank, it's relatively low here. And then you got RSI. 14-day RSI is 52. The 5-day RSI is 38. That tells you in last 5 days or so, stock is getting clobbered. Look at the profit margin. It's a positive profit margin. You could basically go with this company. Long term, they got a lot of things going on in the artificial intelligence world and in the data center and gaming and so on and so forth. On Friday, there is a very good option volume, as you can see here. That's also great. From a put call volume perspective, it's slightly bearish because with Fed putting the brakes right now, that's why put call volume tells you more put options traded than call options. And then we got put call open interest. If you look at the open interest, looking at all the contracts held by retail traders and other traders, is 0.98. That tells you more call options held by customers than put options. That's a great indication. So with that, I say Nvidia checks out here. And for the folks who want to look at the chart, bar chart also gives you a nice flip chart here. You could click on the flip chart and you'll get a nice chart from barchart.com here. Look, we got nice Nvidia chart. Nvidia, as you can see here, trying to go up, nice upswing here, as you can see. That's a very good upswing. Last week was a little difficult week with the Fed increasing the rates by 50 basis points. And you could also look at the on the balance volume, generally trending higher, except for the last week where it came down slightly. RSI generally trending higher. Last week it got clobbered with the general market. And then you can look at the check-in money flow here. Money is still flowing into Nvidia, as you can see here. Volume, we got some red candles last Friday and last week. So with that, it gives you a nice view here. We will close this one here. And then we got a few more. Look, Alibaba has been going higher of late. Look, it's been up positive, up in 20-day, 1 month, and so on and so forth here, but it's down for 6 months. But look at the IV rank, it's low. This is my go-to screener when it comes to buying call option. You might say, you know what, I'm not a big mega cap guy, I'm a large cap guy or a medium cap guy. No problem, you could go right here to set filters here and go here and look at large cap. So that way you don't look at mega cap, you look at the large cap. In large cap, as you look through here, let's go back to the stock screener view here. And look, my favorite large cap stock, as many of you know, is AMD. Stock got clobbered 65 right now, and look at that IV rank, it's very low. And look, from a performance perspective, 5-day, 20-day, all the way to 52-week, it's a negative. Even 2 years is negative, but it's a great company run by legendary leader Lisa Su. And look, it's getting clobbered. Look at the relative strength index in 5-day, it's 22 compared to 40 in a 14-day time frame here. And look at the option open interest here, it's a very high, 3.4 million. So this checks out here from a put call open interest perspective. Look, it's a positive here, more call options held by traders than put options. And look, put call volume perspective, because last week was horrendous. On Friday we had more put options than call options. So if you want to look at the flip chart here, you could click on flip chart. It brings up a nice flip chart here. AMD has been a trader stock, as many of you know here. It goes up nicely, comes down nicely, as many of you know here. Look, last week has been slightly down, just like Nvidia. AMD is also down. So with that, let's go back here. So this is for the folks who want to look at the large cap names. I know many of you don't want to buy large cap. You want to look at maybe mid caps, no problem. You could click on mid cap here and bring up, and look, we got here just one mid cap name doing well. It's United States Steels, as many of you know here. Steel has been doing well. And look, we got steel company, United States Steel here. And look, it's been up and away. Nice performance, as you can see here. And implied IV rank is very low here. And as you scan through here, its options volume is pretty nice. Let's go here. Look, options volume here, it's 768,000, not too bad. Put call open interest tells you it's slightly bearish right now. So that tells you folks are a little bit worried that company has gone up so much. They're a little bit worried, but at this time IV rank is very low. That's for the folks who want to look at mid cap names. And because this is a steel company, you could look at other great steel stocks like Nucor and Steel Dynamics and so on and so forth. And then I know some of you want to look at the small cap here. So you could look at small cap here and just run the results here. And look, we got no match because we have some of these criteria does not bode well with the small cap names. We would change this to maybe 100,000 here. And I think we got market cap is fine. And you could probably go with something like this here, and could also, let's run this and we can change the open interest. If it is too high, I would probably make it 50 instead of 100. there you go. I think this should return some, some data here. Look, we got Kohl's. It's a retail company. Many of the retail stocks got clobbered, as many of you know here. It's big negative. So when the things are negative like this, I would say don't don't catch the falling knife here. Instead, go after better names. So that's for the folks who want to buy call options. We could do same thing here. One of my favorite strategies is to sell put options. You could go into put option screener here and just look at the results here. And let's go to the stock screener view here. And look, we got nice stocks here. And look, the reason this came up in this chart, let's start with the filters here. From a filter perspective, look, we are looking at profit margin positive. When you're selling put option, you are bullish. You want the stock to go higher. That's why it's the range is 0 to we want profit margin to be positive. Open interest, look, we want it to be more than 20,000, and we could even bump it up a little bit to 100,000, or even maybe start with 50,000. And then we got IV rank. We want IV rank to be more than 40, so we get some good premium for selling put option. And relative strength index, we want it to be low, so that way we want to sell put option when the RSI or relative strength index is low, so that way stock is sold off. And price volume, I want to look at very stable stocks here. That's why price times volume more than 500,000. And when you're selling put options, you want the price to be at least more than $30. Otherwise, you don't get too much premium. And I'm looking at large cap stocks, market cap more than 2 billion, as you can see here. So that's my criteria. And I could, just go and see results, and I can change my view to my stock screener view. And look, we got nice set of companies here. Top of the list here, Apple computers. And Apple, look, we got nice IV rank 53. That's relatively high, and stock has been going down off late, as you can see here. And I love this company. I don't mind getting assigned. So I would be basically selling a put option way below the current stock price, say delta 15 or so, delta 10 or 15, and make some money that way. And then you got few more here, and my favorite way is to sort by open interest. I want to look at highest open interest at the top here. Those are liquid stocks where you can sell options. All right, let's sort by open interest here. Look, now we got highest open interest at the top here. Look, Tesla is the one with the highest open interest. If you're selling put options for Tesla, I want you to be understanding. Look, stock has been coming down off late. Elon Musk has been distracted off late. He had been, he has been very active with the Twitter. I would wait for this to settle down here. I would not, go here. Instead, stocks like Amazon, Apple, they're good here. You could go all the way down, go into delta, say delta 15 or delta 10, and you could sell some put options way below current stock price here. And Google is also a good one. I love Google. You could do that too. And we got Meta and so on and so forth. And now what we'll do is we'll look at a few companies here. So if you want to sell put option, for example, for Tesla, you could go into my favorite tool here, Optionstrat.com. So you could go here and you could say build, and you could say we are doing basically selling a put here. You can say short put, and you could put Tesla at the top here. We already have Tesla. And look, it gives you a nice view here, and expiration day, it says 61. I would not go that far out here. I would probably go here January, and I would probably look at 20 or something, which is typically third Friday is the monthly expiration cycle. And you could sell some put option here. And look, I would click on graph here, and look, we have the chart here. Tesla right now is 150, and look, Optionstrat gives you some news here. Tesla shares are trading lower after Elon Musk disclosed a sale of 22 million shares of stock. That's a huge amount of stock sale here. And what you could do is take advantage of this here, and basically, you could sell, put here. And right now we got stock price at 150, as you can see here. If you want to sell put option, I say you go all the way down here. Look, we got some open interest here at put, pretty high, so you could go all the way down here and slide this all the way to say 120 and see how much money you get here. Look at 120. If you sell this put option here, you're going to get $269. That's a good amount here. Tesla is pretty safe from a long-term perspective. If you're worried, if you're worried, you could even go a little lower here. You could go to 100 and see how much money you get here. Look, if you sell at 100, you're going to get $87. That's way low here. I recommend you just go a little higher here and go around 120. That should be good here. You can go to 120 here. Look, 120, your net credit is 269, and your chance of making money is 89%. That's good enough. And as long as the stock stays above $117, you will break even. So that's a good play here. You could go with this. But if you're afraid to sell naked put, you could also do a spread here. You could add one more put here. Actually buy a put at a lower price here. And instead of 150, you could buy a put at say you could buy a put at 130 or so, right here. Now you are basically limiting your actually not 130, you could do right here at 110 here. Now what you're doing is you're bracketing, so that way you don't sell a naked put. Naked put is a little risky for especially beginners. Now look, you're taking a $10 wide spread here, and by doing this, your net credit is 115, which came down slightly. But look, your estimated margin is 1,000. So whether the Tesla goes high or low, this is the maximum margin, and you could lose at the maximum 885, and your chance of profit is still 87%. That's a great chance of profit here. Typically, that's why most people like to sell put option, because they can make money most of the time. That's why it's a great strategy. And you could do the same thing. There are a few more stocks here. I love Amazon.com. It's a great stock here. You could do same thing for Apple. Apple is one of my favorite stock here. Given Apple has got high IV percentile, or sorry, IV rank, as you can see here, you could take advantage of this high IV rank, and you could sell some put option. You could go here to Apple, which is one of my favorite stock here. And look, you could sell, you could do same thing here, sell put option here. You could go January 20th, that's great. Apple is at 134, as you can see here. And as you look through here, 120 is a good, or even 125 is a good one. And if you do 125, look, you're making 125 and 115, it's a $10 wide spread. If you do that, you're getting nice money here. Look, $143 net credit here, and your margin requirement is 1,000. Your max loss is 857. Look at the chance of profit, nice and high, 79%. But if you're like me, for Apple, you really don't need to buy this lower put here. You could just go cancel this, and if you remove this here, look, you are getting $225, and chance of profitability is 81%. If you're a little bit afraid to sell put options at 125, you could even go a little lower here to 115. Look, if you do that, the money is a little less, go to 120. 120 is good enough here. You bring in $137, as you can see here. Chance of profit is 88%, and your max loss is 11,863. That's as if you are going to buy the stock itself at 120 dollars or so here. That's actually 12,000 minus the money that you received here, which is net credit. That's what this amount is. Apple being a good stock, you could go with this. But if you're a little bit afraid, or if your account size is low, or if you don't want to take so much risk, I say you go to 125 here and add buy one more put option. Buy put around say 115 or so. That should do it. So if you do that, you still bring in good money here, $143, and you don't take too much risk here. Your max loss is also low. This could be a good strategy. So with that, thank you very much. Don't be afraid of the market. Take advantage of this high volatility, especially in these great stocks. And one thing I also love to do is really, go into ETFs. With this, you could do same thing with the ETF here. You could go to ETF screener, and you could bring up, as usual, you could bring up, I got here, ETF option here. I could click on it here. And look, I got my criteria set here. I want open interest, more than 1,000 at least, price more than 20. I can be even a little more, restrictive here. Make it 100,000 here, so that way I don't look at all the stocks. It's brings some good stocks here, or good ETFs. Let's go with this here. Look, out of all ETFs, now we are really having a low amount of ETFs here. And look, it's not so many. It's just 60 ETF. If this list is too high here, I recommend you can go in here and you could change. And basically you can say here, even you can increase this here to 500,000 here. You'll bring down this list even further down. And look, I think we are in a good shape here. Now we are down to 31, not too much here. And what you do, same thing here, go sort by total open interest here. So I want the top open interest at the top here. Look, we got my favorite ETFs. I love SPY, QQQ, IWM. These are my favorites here. I trade this day in, day out. Especially selling put options on these is very good when these are collapsed big time here. And you could also buy call option. By looking at the IV rank, you can make a decision to buy call options or sell put options. Look, when the IV rank is high for SPY, sell put options or sell put spreads. When the IV rank is low for IWM, you could buy call spreads or buy call options. I love to do same thing for a few of my other candidates. Like I love FXI. It's a great one. You could do same strategy, and you could do same thing for KWeb, again Chinese stock. ARC is a good one here with the Cathy Wood. You could do same thing for SMH, which is semiconductor ETF. And if you're a person who want to look at futures, no problem. You could go into futures here, and you could do same thing here. You could look at futures and sell on the indexes and so on and so forth. Same thing. You could do SPX, NDX. You could sell put options and buy call options as usual. Those are very liquid. You could do it all day long here. Alright, so with that, we'll wrap it up here. Thank you very much. Happy investing and trading. Please subscribe.